This is Mandar from Copper, and I am going to talk about how mutual fund investments are taxed. Well, the tax that you pay on your mutual fund returns depends on the type of fund that you have invested in. Like I said earlier, there are different types of funds, from equity mutual funds to debt mutual funds to hybrid funds and ELSS mutual funds. So the taxation depends on the type of the fund, and second, the taxation depends on how long you have invested in that fund, right? The tenure or the period of your investment. If you are investing in equity mutual funds and you've stayed invested for more than 12 months, more than a year, right? Then that investment is classified as a long term investment, right? If you're invested in debt mutual funds for more than 36 months or 3 years, again that investment is termed as a long term investment. Else it's termed as a short term, right? So let's say you invest in an equity mutual fund and withdraw the money before 12 months, right? Your investment horizon would be considered as short term. Similarly, if you invest money in a debt mutual fund and you withdraw it before 3 years, right? Again, your investment would be considered as a short term investment. So now long term equity mutual funds, which means if you have invested for more, been invested more than 12 months and you withdraw the funds after 12 months, right? You will get a 10% per annum tax, right? On capital gains more than 1 lakh, right? So let's say, you invested, let's say 5 6 lakh rupees, and let's say you made 70,000 rupees on those investments in 1 year, right? So here you have made a capital gain of 70,000, which is less than 1 lakh, right? So you don't have to pay any tax on redeeming these funds after a year. Up till 1 lakh rupees of capital gains, there is no tax that you have to pay on your returns that you get from your investments. But let's say you've invested 10 lakh rupees and you've stayed invested in the market for more than a year, and you get a gain of, let's say, 1.5 lakh rupees, right? So for the first 1 lakh there is no tax, but for the next 50,000 of gain there will be tax that you will have to pay, right? Short term mutual fund, equity mutual funds are taxed at 15%, right? So which means if you withdraw your funds before 12 months, you will be taxed at 15% on the capital gains that you have made. Long term debt funds, which means if you are invested in a debt mutual fund for more than 3 years and you withdraw the amount, right, you get a 20% with indexation benefits. Short term, which means if you're withdrawing before 3 years of time, then you will be taxed as per your tax slab, right? So if your income falls under the 20% tax bracket, then you will be charged at 20%. If your income falls under the 30% tax bracket, then you will be charged at 30%, right? So there is one type of mutual fund, ELSS, which is equity linked savings scheme, right, that provides tax benefits under section 80C. It will help you to save income tax, right? So an investment in ELSS mutual fund, right, will give you benefits of 1.5 lakh per annum toward as the premium you are paying towards an ELSS mutual fund, right? For balanced mutual funds or hybrid mutual funds, uh, they would be taxed basis on what percentage of your funds are towards equities or towards debt. If more than 65% of your funds in a hybrid mutual fund are in equity, then they fall under equity taxation, or else they fall under debt taxation, right? So this mutual fund taxation is quite efficient in India, right? And the higher income you are earning, right, and the more you are invested in equity, stock markets, mutual funds, right, the more efficient it is for you as compared to any other financial instrument. So just to summarize, we have a small chart here that will help you to determine how you will be taxed, right? So first is you need to look at which type of mutual fund you are invested in, whether it's an equity or a debt. Then you need to look at the investment horizon. For an equity, if you're invested in long term, more than 12 months, till 1 lakh capital gain, there is no tax. More than 1 lakh capital gain, there is a 10% tax. Let's say you have made a profit of 1.5 lakh, then you have to pay only 5,000 rupees tax, which is 10% on 50,000. For short term, which is less than 12 months, you have to pay 15% tax plus cess. On debt for long term, more than 36 months, 20% tax with indexation benefits. And short term is if you withdraw the funds from debt mutual funds and you've got capital gains, it will be taxed as per your tax bracket. That's it for now. I hope you like this video. Have a good day.